Yes, sir. Here we go. Yo, what's going on, guys? Welcome to another video. Okay, we got some things to talk about today. First off, we're going to start right out the gate by telling you guys, don't you dare, don't you dare be fooled by this bear market rally. And yes, folks, that's exactly what you're seeing right now. You are seeing a classic case of bear market rally action, okay? What you're seeing is you're seeing a sharp, large percentage rally. Okay, we've seen this before. This happened earlier this year in March. Most of you guys, you could go back and look and you can see that we actually had something very similar to what we saw today happen in March of 2022. Okay, we saw this happen. In my opinion, this is just a technical bounce off of an oversold market. Okay, at the end of the day, we still got bearish sentiment. Okay, now I want to be very clear because unfortunately we got the crybabies in the comments. I know I haven't said the squirrel voice in a while, have I? But I'm bringing it back. Okay, we got the crybabies in the comments.
Why are you telling people to buy now? You're an idiot. You don't know anything. Everybody's going to get destroyed and keep their earnings. You're coming back and Jerome Powell and a
shut up. I've been very clear on this channel. I ain't a stock picker. I ain't your financial advisor. I barely even talk about stocks on this channel anymore, okay? I've been very consistent. Buy the S&P 500 and chill, okay? So that's my response to those crybabies. The other thing I want to say to that is I've been very clear. I think the market has plunged so much that it does make sense to buy here. Now, obviously, I wouldn't buy today when the market rallies 3% in one day. But, you know, last week we were buying. I was buying, and I don't feel bad about that. Now, of course, we very likely will go lower, and I definitely think that we will go lower. Don't get me wrong. I still think that the trend is bearish. But one thing you don't want to get into the habit of, the bad habit of, is trying to time the market, which is not something that I'm into either. My thing is, when it makes sense to buy, when we're reaching key moving averages like we literally just did, you got to buy. I mean, that's what the big boys do. Those big freaking hedge funds and managing funds and actively traded funds, they do the same thing. Them algorithms and them robots, they buy on those major moving averages too. That's probably why you're seeing this bounce that you're saying. But yeah, I definitely think we'll go lower, no doubt about it. But again, you got to remember, you can't time the market. There's going to come a day where you think the market's going to go lower and it doesn't happen. And that'll be the bottom. We have no idea when that time's going to come, but it will eventually happen. So you just got to buy when it makes sense. And again, investing is all about doing what's best for you. Okay. It's not about following somebody on YouTube or, you know, oh, let me follow this person's strategy or that person's strategy. Everybody got to have their own dang strategy. My personal strategy is majority of my money goes in S&P, and I do mess around with individual stocks as well. And I even do some trading from time to time, although I don't promote that. But at the end of the day, the best thing any investor could do is buy the S&P 500. Okay, blah, blah, blah. Let's move on to the big news that we got. We got this Wall Street Journal article that came out today, folks. It says here, the United Nations calls on the U.S. Fed and other central banks to halt interest rate increases. I only got one question. What bags are they holding? Because what? Where did this come from? I'll continue reading the article. In its annual report on the global economic outlook, the United Nations Conference on Trade and Development, okay, said that the Fed risks causing significant harm to developing countries if it persists with rapid rate increases. The agency estimated that a percentage point rise in the Fed's key interest rate lowers economic output in other rich countries by 0.5% and economic output in poor countries by 0.8% over the subsequent 3 years. Says right here, the United Nations estimates that the Fed's rate increases so far this year will reduce poor countries' economic output by $360 billion over the next 3 years, and further policy tightening would do additional harm. Okay, I understand where they're coming from in terms of how would it affect the poor countries and different things like that, but there are poor people in America too. And inflation is absolutely destroying and affecting poor people as well. Now, what's interesting is New York Fed President John Williams came out today and said that rates have yet to rise to restrictive levels and tightening still has significant ways to go. They ain't stopping, folks. He added that core markets are functioning, continue to function reasonably well, and despite financial stability concerns. So I don't know if that's a response to what the United Nations had to say, but it certainly feels like it. It says right here in this Bloomberg article, monetary policy is not yet in a restrictive place for growth. My view is we still have significant ways to go. He's pointing to projections showing that Fed officials expected to raise their benchmark interest rate to 4.6 by the end of next year. This is from current levels that are just above 3%, which is basically where we are sitting at right now. Now, let me actually go ahead and speak about the Credit Suisse situation, okay, guys? Because it's all over Twitter. And I just think it's funny how when certain situations happen and they become popular and they blow up on the media, all of a sudden everybody becomes an expert in that. Like all of a sudden the Credit Suisse thing is happening and now everybody's an expert in banking. But me, on the other hand, the reason why I'm not going to talk about it, why you won't see any videos from me, is because I don't know crap about banking. Same reason why you guys never see me make videos about, oh, the housing collapse is coming, everybody's going to die. I don't know anything about real estate. I think that's the rule of thumb for both content creators who do finance and investors, right? If you are a content creator, it's your job, in my opinion, especially in finance, to provide accurate information. If you don't know what the flapjack you're talking about, don't talk about it. So I have no comment on the Credit Suisse thing because I just don't understand enough about banking. I don't know what credit default swaps are. And yeah, I guess the final news we're going to talk about is, yeah, I made a video talking about Kim Kardashian and how she's an absolute scum and a loser. And she promoted a crypto scam, but she got fined for it by the SEC. And oh, did I get smacked in the face, as well as all the investors who got screwed, who followed her in the buying whatever, Max Ethereum, whatever the heck that crap was called. Spotify literally just announced like 10 minutes ago that they're doing a podcast deal with Kim Kardashian. I don't know if you guys know, but Spotify pays these people a lot of money. So that takes care of that $1 million fine she got. It's the saddest thing ever. Unfortunately, when you reach a certain status, that's how it works in this country. When you reach a certain level of status, fame, wealth, you can pretty much get away with anything as long as you don't kill somebody or do anything overly heinous. But in terms of like the little white collar stuff, you can pretty much get away with it. And on the same day that you get a criminal, I guess it's not criminal, but the same day that you get a regulatory infraction upon you from a regulatory body, the SEC, happens to be the same day that a huge company like Spotify announces a podcast with you. It's just disgusting and a slap in the face. But anyway, that's my rant for today. Not a big news day, guys. Not a big news day, but I do think that today was a technical bounce. I think that's all that was. So anyway, I'll be back with more updates. Stay tuned. Thank you guys so much for watching. Feel free to like the video, and I'll see you guys in the next one.